Imagine waking up one morning and seeing that the price of silver just crashed 10% overnight. No war, no recession, no major news, just a brutal drop that erases weeks of gains. Now imagine that happening over and over again, every time silver gets close to a key level. You might call it bad luck. But what if I told you it's not luck at all? What if someone on purpose is crashing silver to protect something much bigger than just a metal? You are watching Macro Truth, and today I'm going to show you the proof that silver is being manipulated not by accident, but on purpose. And before we go any further, if you are tired of being kept in the dark about how money and markets really work, hit that like button and subscribe to Macro Truth right now. Stay with me until the end, because the evidence we're about to walk through will change how you see silver forever. Let's start with a simple fact. Silver is both a precious metal and an industrial metal. It's used in solar panels, electric vehicles, medical devices, and electronics. Demand has been rising for years, yet the price has stayed strangely low. In fact, silver today is cheaper than it was 40 years ago when you adjust for inflation. How is that possible when we are using more silver than ever? The answer is not supply and demand. The answer is a small group of banks and traders who have learned that they can push the price down anytime they want, using a tool that most investors don't fully understand: paper silver. Paper silver means futures contracts, options, and other derivatives that represent silver without actually owning the physical metal. These contracts trade on exchanges like the COMEX in New York. And here's the dirty secret. The amount of paper silver trading every day is many times larger than all the physical silver in the world. So when a few big players decide to sell a massive amount of paper silver contracts, the price drops instantly, even if nothing has changed about real physical supply. This is not a conspiracy theory. This is public data, and the proof is in the timing. Take March 2020, when the pandemic first hit. Silver crashed over 30% in just a few days, falling below $12 an ounce. Most people thought it was just panic selling, but look closer. On March 16, 2020, the COMEX raised margin requirements for silver futures. That forced many small traders to sell. Then, within hours, a wave of huge sell orders hit the market, all from the same group of banks. The timing was so perfect that even the Commodity Futures Trading Commission, which is the U.S. regulator, later admitted there might have been manipulation. But no one went to jail. No one paid a serious fine. The system just moved on. Now let's talk about the London silver fix. For decades, 5 banks got together every day by phone to set the price of silver. They called it the fix. And for decades, traders inside those banks would place their own orders just before the fix, knowing exactly where the price would go. In 2014, regulators finally caught them. Barclays, UBS, Deutsche Bank, HSBC, and others paid hundreds of millions in fines. One Barclays trader even wrote in an internal message, "The fix is a racket." He admitted that he would push the price down or up depending on what his own desk needed. That is not theory. That is a confession. And yet, after the fines, the same banks were still allowed to trade silver. The only thing that changed was the name of the process. Today it's called the LBMA silver price. But the same banks are still there, still setting the benchmark, still trading huge positions before and after the fix. So where is the proof that they are still crashing silver on purpose? Look at any major silver rally in the last 10 years. In August 2020, silver broke above $28 for the first time since 2013. Retail investors were flooding in. Physical silver coins were sold out everywhere. And then, suddenly, the price reversed and fell $10 in 2 weeks. What happened? The same banks increased their short positions to record levels. A short position is a bet that the price will fall. And the data from the Commitments of Traders report, which is released every week by the CFTC, shows that just before that crash, 4 commercial banks held over 60% of all short contracts in silver. That is an extreme concentration. In a free market, you would never see 4 entities controlling that much of the short side. That is a cartel. Now, I know what some of you are thinking. Isn't silver just volatile? Doesn't it crash on its own? Yes, silver can be volatile, but the pattern is too consistent to be natural. Every time silver approaches $30, you see a wave of aggressive selling from the same few banks. Every time it gets close to $20 on the low side, you see those same banks covering their shorts, meaning they buy back to lock in profits. They are not just passive participants. They are actively managing the range. They have turned silver into a controlled market. And the proof is in the price action right after major announcements. For example, in February 2021, after the Reddit rally pushed silver briefly to $30, the COMEX raised margin requirements 3 times in 1 week. Each margin hike forced small traders to sell. And guess who was on the other side of those trades? The big banks. They had positioned themselves with massive short contracts before the margin hikes were even announced. How do they know? They don't know. They are the ones who ask the exchange to raise margins. They have direct lines to the regulators. They have former CFTC and COMEX officials working as their compliance officers. This is called the revolving door, and it is the reason no manipulation case has ever brought down a major silver bank. Let me show you a specific piece of evidence that most people have never seen. In 2017, a whistleblower named Andrew McGuire, a former metals trader, released recorded phone calls between himself and a COMEX official. In those calls, the official admits that certain banks were given advance warning of a change in trading rules that would crash the price. The official even said, and I quote, "They wanted the price lower before the fix." That is a direct admission. And what happened after those calls became public? Nothing. The media ignored it, the regulators took no action, and the banks kept trading. That is the world we live in. The proof is right there, on tape, and still nothing changes. Now, you might ask, why would they crash silver on purpose? What do they gain? The answer is not just profits from short selling, though those are enormous. The real reason is that silver is money. It has been used as real money for thousands of years. And central banks, especially the Federal Reserve, do not want people to remember that. If silver and gold became too expensive, people would start losing confidence in paper dollars. They would start hoarding real money. That would make it very hard for the Fed to print trillions of dollars to fund government spending. So keeping silver cheap is not just about making money for a few banks. It is about protecting the entire fiat currency system. That is why the crashes always happen at the worst possible moment for silver bulls. That is why the timing is so perfect. They are not just trading, they are sending a message. Look at the data from 2023. Silver demand hit a record high, driven by solar panel manufacturing. The physical market was in a massive deficit. And yet the price ended the year lower than it started. How does that happen? It happens because paper silver dominates price discovery. The big shorts sold enough paper contracts to overwhelm any physical buying, and the exchanges allowed it. In fact, the COMEX has a rule called the position limit, which is supposed to prevent any single trader from holding too many contracts. But those limits are full of exceptions for hedgers. And the banks classify themselves as hedgers. Even though they are clearly speculating, they are using a loophole that was written by their own lobbyists. Remember the Hunt brothers in 1980? They tried to corner the silver market and the government crushed them. They changed the rules overnight. But when banks do the same thing in reverse, crashing the market instead of raising it, the government does nothing. That tells you everything you need to know. The system is designed to protect the downside, not the upside. They want silver cheap. They want you to think it is just a boring industrial metal. But the proof is in the charts, the whistleblower tapes, the fines, and the internal emails. This is not a random market. This is a managed market. So what can you do about it? First, recognize that the paper price is not the real price. If you want to own silver, buy physical silver. Take delivery. Hold it in your own hands. As long as you play their paper game, you will always lose to the house. The house has infinite paper, but physical silver is finite, and the gap between paper and physical is growing wider every day. Eventually, something has to break. When that happens, the banks that are short will try to cover, but there will not be enough physical metal to go around. That is when the real price discovery happens. That is when you will see silver go to levels that most people cannot even imagine. Now, I want to be clear. I am not giving financial advice. I'm just showing you what the evidence says. The evidence says that silver has been manipulated for decades. The evidence says that the same banks keep getting caught and keep doing it again. The evidence says that regulators know and look the other way. That is the macro truth. And if you have made it this far in the video, you are already ahead of 99% of investors. Most people still believe that markets are fair. You know better. So here is what I want you to do right now. Leave a comment. Tell me your story. Have you ever bought silver? Do you think the price is real? I want to see what you think. And do not forget to share this video with someone who still trusts the system. Because the more people understand this, the harder it becomes for them to keep crashing the price. They want you to give up. They want you to sell your silver at a loss and never come back. That is how they win. But you are watching Macro Truth, which means you are not most people. You see the pattern, you see the proof, and now you have a choice. You can either believe that 4 banks can control a global market forever, or you can trust the physical reality that supply and demand eventually win. History says the physical always wins, but only for those who are patient. Thank you for watching. Stay sharp, stay curious, and remember, the truth is always there if you know where to look.